Alright, nice to meet you all. Good day, everyone. It's your boy Goddy FX, and I'm here live to talk to you about a particular topic, which is basic market structure. Today, we're going to talk about basic market structure, which is simply the most essential topics every trader has to come up, which is the foundation of trading. Now, basic market structure simply means the foundation where markets structure, the overflow, the market direction of every single market you want to trade. It could be of crypto, forex, or stocks. Any market you want to trade, you have to have a basic knowledge of how that market moves. What are the conditions that makes that market moves, and how did you identify if this market is moving towards your direction or against your direction? Now, basic market structure is simply defined as the overall market movement or a particular market movement happening particular time. Now, this helps you as a trader to identify if the market is on an uptrend or a downtrend. And whereas three basic market structure which we know, which is the uptrend, the downtrend, and a consolidation market. This is the uptrend tells you that this particular market, it's moving on an uptrend, like the market is creating what we call higher highs. You understand that the market is intending to go high. You understand, like buying something for 0 and it's going to 10. That's what an uptrend is. It's a simple analysis. Now, a downtrend means that the market, it's declining, it's down, like buying something from 10 and it's going to 1. Yeah, that's what we mean by downtrend. It's just a normal analysis that we just, the definition doesn't matter like that. Now, when we talk about the consolidation market phase, this is a kind of market phase that doesn't go either up or down. It's a consolidation part, you understand. Now, in this kind of market phase, it's a kind of market phase whereby both the buyers and the sellers has no control in the market. But in the downtrend, it's telling you that the sellers has much control than the buyers, while in an uptrend, it's telling you that yes, the buyers has much control over the seller. Now, as a trader, one thing you always find out or look out to be in the game is always follow the trend. You understand? Always follow the big boys. Now, there are people who moves the market. Now, remember, trading, let's say forex, crypto is a decentralized business. You understand? Nobody handles it or gives it any rules to regulate it. But even if that, there are some kind of certain big boys, the waves, the banks, you understand, that moves this market. So in order for you to be profitable, you have to always follow the big boys movement. You understand? So today we are going to go to topic called basic market structure, and it's going to be one of the best you're going to see on YouTube and every channel. Today we'll be talking about basic market structure. As we both know what basic market structure is, just talking about the three phases of market, you understand, which I already explained before this time, but since it's a new video I have to explain again. We have what we call the uptrend, we have the downtrend, and we have the consolidation market, which is also known as shopping market or ranging market. You understand? So now, basically, with the names called, you understand, it's quite very easy for you to understand what it means. Let's say, for example, what is an uptrend? Without you even explaining or without somebody telling you what an uptrend means, using the layman understanding, it means that this thing is particularly going up, like it's up already. You understand? The movement is it's towards up something. That's a layman understanding, and simple. That's how trading is. Trading is really simple. You have just to understand the basics. You understand? So now, what is an uptrend? An uptrend is a trend that tells you that the market is moving direction of the upside. You understand? Now, what is a downtrend? It's the opposite of an uptrend, that the market is moving down. You understand that sellers are taking over the buyers. Now, there are always two things in trading when we talk about buying and selling. You understand? Buy means that the market is up, like people are buying it. Sell means that the people are selling it, means that the product is going down, you understand. So now when somebody says something is an uptrend, it's telling you that the buyers are taking control over the market. Then when somebody tells you that the market is on a downtrend, it's telling you that the sellers are taking control over the market. So now, before I have to draw anything on the board, I have to just explain this so that it will be easy for you. So now, as a trader, what did you always have to do? Now, you are a real trader. You are nothing. Like, your money does not affect the market's movement. You understand? I used to tell you guys this thing. Your money does not affect the money, like the market, the movement of the market. Now, there are people we call the top boys, the waves, the big companies like the BlackRock, Apples. Those kind of companies moves the market. You understand? Because of the kind of liquidity they put in the market. Now, what is liquidity? Liquidity means money. The amount of money they put in the market, that's what moves the market. You're a real trader who trades through a broker. So no matter the kind of money you put in that market, even if you're trading an account of 1 million naira or 1 billion naira, it doesn't move the market because you're a real trader. You understand? So now people that really moves the market are all these top boys, the bank, the high institutions that trade also. Those are the people that moves the market. So now, as a trader, what did you require to do is you always trade towards the direction of the waves, the big boys, the banks, the institutions. That is what when the banks are selling, all you have to do is always look for opportunity to sell with them. When the banks are buying, all you have to do is always look for an opportunity to buy with them. Don't always go against the big boys. You understand? That's all about trading. And when it comes to when we say what is a shabby market, that kind of a ranging market, which tells you that the market doesn't go up or neither comes down. You understand? So in that kind of market direction, I used to advise. I particularly doesn't trade that kind of market structure. You understand? I used to advise to keep off from that market structure. You should always watch. There's also a strategy in trading that says you watch. It's better you sit at your arms and watch than you placing a trade that your heart will be like going for 360-degree beating. You understand? So now we'll continue and I'll make a very good scenario here. So now I have to draw now. So now we will talk about an uptrend. Now this is an uptrend. This is how an uptrend looks like. When you see any market moves like this, it creates a new high and a new low, a new high and a new low, a new high. Now let's talk about the downtrend. This is a downtrend. It creates what we call new lower low, a new lower high, new lower low, breaks the previous one, creates another new lower high, and keeps trending down. You understand? This kind of market always keep trending down. You understand? So now let's talk about the shabby market. I'm going to explain everything. Now this is how the shabby market moves. It doesn't create any high or low. It keeps repeating itself in one angle. You understand? It's called the ranging market. It's a kind of a very confusing market because you don't know the direction of the market. You understand? So this is what a shabby market looks like. So now let's basically explain this uptrend. Now this is an uptrend. And when we are talking about uptrend, we are talking about two particular things you should always notice. The first thing I say that an uptrend is a market structure or a trend that tells you that the market or the buyers are taking over control, which means that the market is tending to go high at every single point. So what you need to do as a trader in this particular market structure is always for you to look for an opportunity to buy with the trend. So now, your question now will be, how can I identify what an uptrend is and a downtrend? Now, in an uptrend, listen very attentively. In an uptrend, we are always looking out for two things, which is called the higher high and the higher low. Now, I'm going to point out what an higher high is and a higher low. Now, this particular angle is called higher high, which we always identify as HH. You understand? It's always identified as our HH. I'm trying to move this, and this point below here, it's always identified as higher low. Now, the next one we are going to look out for is the next movement of the market. When the market creates an higher high, what is the next thing we are looking for is the market to always create a new higher low. And when it creates a new higher low, what else are you expecting? It's the market to break out from this higher low and create a new higher high, which is this particular point, creating a new higher high. You understand? And the next thing is it always creates, now let me just write out something first. It always creates a new higher low. Now, in an uptrend market, there are always two things you should look out for. Listen very attentively. That when the market creates a higher high, a new higher high, it's always broken. That the higher highs are not protected, but the the higher lows are always protected. Like, let's say this is the higher low. You understand? This particular angle is always protected. You understand? This particular angle, the lower lows are always protected. Because now, the reason why you always look out for that, when it creates any higher low, it should be protected, is whatever happen, and let's say for example this particular angle here, remember it's your higher high because it's a new high. You understand? When this high here go and break from this low, you understand, which is this higher low, it tells you that the market has changed direction. It's intending to go down because this protected low, because this is a protected low, all the market has to do is, no matter what the market wants to trend to, it should not break from this trend here. It should not break from this low. So when the market breaks from this low, it's telling you that, okay, now at this particular point, the market is intending to change direction. Now, let me use a very simple scenario. This market you're seeing here is like two people fighting. You understand? We have what we call the bulls and the bears in trading. The bulls are the buyers, the bears are the sellers. Now, these two animals are very strong animals. If you know about the bulls and the bears, those are very strong animals. They have equal power. If we may say, they have equal power. And the bulls and the bears, which are the buyers and the sellers, always intend to fight. And let's see how much each person puts in the market that moves the market. You understand? So now, whoever have to win takes the market control. That's how this trading is. So now, as a real trader, what you always need to do is look out for who is always winning. You understand? Like, who is it? The buyers that are in control now? Is it the buyers that are more powerful now? Let's go for the buyers. You understand? Is it the sellers that are more powerful? Let's go for the sellers. So now, we are talking about higher low. If this higher low is broken, if this particular higher low is broken, it tells you that the market's direction has already been changed. You understand? It tells you that the market direction has changed from uptrend to a downtrend. So what you are looking for in every uptrend is that your higher low is always protected, but your higher high is not protected, because the market always intends to break, because the market keep going up. You understand? So that's what higher high and higher low means. So now, when we go to a downtrend, this is a downtrend. You understand? What are we looking out for? We are looking out for two things also. I always tell you it's just the opposite of the uptrend and the downtrend. So now, in this particular point, we are looking out for two things. And what are we looking out for? In the downtrend, we are looking out for what we call the lower high which is the lower high, and we are looking out for here is what the lower low, which is LL. You understand? So in this point here, in the downtrend, what is being protected is the lower high. The lower high is being protected because when the market intends to break any current lower high, it's telling you that the market, if the market has to break from this point, let's say for example, this is the new lower high. You understand? This point is a new lower high. You understand? This point is a new lower high, and here is the new lower low. You understand? So, and the market, as the market has broke from this point here, this lower high, lower low, and created a new lower low. So now this point, which is the lower high, is protected. And when, let's say for example, you see something like this, and you see something, it broke from this place, and you see that the market has broke from this particular point, you understand? This is telling you that the market has changed direction. That the market has changed direction. This is tending to start going up. So what we are going to prepare for is you to wait and see what the market is about telling you. It's either the buyers are now taking control over the sellers in this point, that the sellers has really stretched themselves, like they have exhausted all their money to trade. So now the buyers have now come in to buy the product. So these are the two things you look out for. So the next thing we should be looking out for is what we call the shopping market. Now what is a shopping market? I explained, I told you that this is what we call a shopping market, does not create any high or low. It tends to range in, it doesn't create any form of high or low. It intends to be in one direction, up and down, for a very long time. So now this is all we have to say about basic market structure. It's very simple and clear. You understand? So now this is just the basic diagram explanation, and this is what really affects the market. You understand? This is what you are going to see in a live trade. So now let's go to the live chart now. Let's go to, this is just previous market structure. So let's use this as an example. Now if you can clearly see this particular market structure is what we call a uptrend. Why do we have to call this an uptrend? Because with you easily looking at this market, what you can spot is that the market is tending to go up. Like the direction of the market is up, it's ranging up, it doesn't go down. You understand? That's what they call an uptrend. So what is the first thing you have to notice is what? Your lower high, which is this, your higher low, sorry, and this is your higher low, which is always what? Protected, and what? Your new higher high, which is this, that is not always protected. And the market broke out from that point. The market broke from this point, from your higher high, and this is your higher low, and break from this and created a new higher high. This is your new higher high, and this is your new lower low. You understand? The market always break out from that point, creating a new one. You understand? And that's how the market moves. It creates a new higher high, and it keeps going up. It creates new one, lower low, that is always protected, and you see it keep going up. You understand that the market, no matter what the market has to do, it always intend to respect their previous low, because it's always protected during an uptrend. So now this is just already played chart, so I'm just trying to explain something to you. Personally, when we get to ABC pattern, we'll have a live class. That one I will have to explain very well for you, but just try to understand this point. Now this here, with you looking at here also, is what we call a downtrend. It's just what I explained. This is what your lower high. You understand? and this point here is what your new lower low that was being broken, and it created a new one. This is the new one, and you see now, no matter how this market, this particular, now check this thing out, no matter how this particular market has to go up since it has broken this new low. This was the low, this particular place was the new low. Since it broke the low to the downside, no matter how the market has to go up, it didn't intend to come to this point here, because this place is a protected low, which is the higher low. It's a protected low. So no matter how the market has to go, it has to end somewhere and start trading down again. You can see that the market start falling. So alright, thank you. We're done with the class, and I hope you all understood what basic market structure is. It's just a simple analysis that tells you that when the market moves up, it's an uptrend. When it goes down, it's a downtrend. In the phrase where it doesn't move anywhere, it keeps going up and down without changing any trend, it tells you that this particular market phrase is what we call a consolidation market phrase. And in this market phrase, I always advise my students, my mentees, and those who take in my signal or listening to this video not to trade in a consolidation market phrase, because you don't know who is leading the market at this point. So once again, I will have to say thank you. I'm Goddy FX, and I'm glad to have you all listening to me. I have show appreciation. All I want you to do for me is just subscribe to my YouTube channel, give me a like, thumbs up. On the comment section, always tell me what next to talk about. I'm very grateful and glad to have you all here.